Today, we're going to be talking about financial indicators, QE4, earnings per share, yield curves, gold. But all that fancy stuff, if that doesn't appeal to you, don't forward the video. I'm going to be talking about Bitcoin in the end. So stick through it. It's going to be a very short video, but I'll tell you why the financial indicators are pointing to good signs for Bitcoin. So stay tuned for that. Hello and welcome everyone to this video, which I think will be very, very exciting for you if you're following Bitcoin and crypto. So I'm going to be talking about a few economic indicators that we've seen over the last 3 months, from July, August to now in October, that may indicate a very positive sign ahead for the likes of Bitcoin and potentially other cryptocurrencies, right? So let's start. Let's start with a few of the smaller ones, and then I'll talk a little bit about gold and international trade and what the impact may be for Bitcoin. So let's have a look at this. So over the last 3 months, we've seen a few economic indicators, and if you've been watching this closely, you know that all the experts, all the economists out there, not just the YouTubers, but even on the famous channels like Bloomberg, some of these websites, famous economic websites that we have been predicting recession, doom and gloom. But are these founded, or is it just scaremongering tactics? Well, there are some very interesting things that have been happening. So the first is the yield curve. Now, this is one that you may have heard of a few times if you watched any business-related show or economics-related show on TV. So the US Fed government sells treasury bonds to investors as a way to borrow money. These are seen as very safe assets because they are essentially backed by the US government. However, the interest you earn isn't going to be very large. So when people move money into short-term treasury bonds, what they're saying is that they don't want to put it anywhere else in the market. They feel that there's trouble coming. They want to move to a safe haven. And when this yield curve flips, it's a sign that maybe very smart people out there see problems with the market, with the economy, the global economy, and they're moving to a safe haven. So that's number one, the yield curve flipping. Now, the flipping of the yield curve has predicted the last 7 recessions, with only one false positive in 1998. Could there be a false positive now in 2019, start of 2020? Perhaps, if not for the other signs that I will talk about now. So let's go to sign number 2. Another factor that I feel, and I waited a few weeks to make this video, and we actually do have an announcement now which I'll cover, but another factor that I feel could be a good economic indicator for Bitcoin, but bad for the market, is the various trade wars that's happening, especially the US-China trade war. Now, as I said, I waited to make this video, and we've seen some kind of deal. From what I hear, it's not the best deal. It's not very comprehensive. It's just the bare minimum. I think there's still going to be friction between the US and China on trade. I think the current administration, that's something they're going to be very tough on. It does affect people in the rest of the world. So I'm not in the US or China, but that trade war, you're going to get winners and losers, right? You're going to get people that are dependent on a very strong Chinese economy that will lose if they're selling commodities to China. You're going to get countries that are ramping up their competitive capability, like Vietnam and India, and they've already won from this trade war. By the way, if you look at what Samsung did the other day, they've shut down all cell phone plants in China, and they've opened the largest one in the world in India. So there's going to be winners and losers. What it also means is that you'll see the Chinese, who are big fans of gold, move to safe havens. And that will also be a further impact to crypto and Bitcoin, and where I'm getting to at the end of this video. So let's just recap. We've seen a few indicators like the yield curve flipping, which has in the past predicted recession 7 in a row. With only one false positive. We've seen a few other indicators like earnings per share, across the S&P be down. We've seen trade wars. We've also seen quantitative easing. Now, this is something that's a big talking point, a point of debate amongst economists, right? Quantitative easing refers to when the money supply is actually increased. Central bank and government prints more money. And the reason they do that, they claim that you need more liquidity in the market, and bigger money supply is needed for consumers and businesses. However, it's not always as simple as that. Basically, you will see that they use it for debt purposes. They use it to, for spending, trade deficits. And what we've seen in about September was rapid printing of US dollars. There was an article on Seeking Alpha saying that 160 billion had been printed. Now in October, we heard that they will print about 50 billion, I think it is 50 billion, 60 billion per month for the next 6 months. So a massive increase in the US dollar money supply. Where does that go? It should go into the general money market, right? But it doesn't always do that. There's a theory that the expansion of that has gone straight into the stock market over the last decade, let's say, which has artificially inflated stock prices. I'm not saying I agree with that. You'd have to do a lot more analysis to be able to prove that. But that is one theory. That is an example of what people say has happened. So what most experts agree quantitative easing will do is bring inflation, okay? Because you have more money supply. In this case, it sounds like a massive increase in the supply of US dollars, which means that every dollar you have is technically worth less. And inflation has an impact across the broader economics. But what we focused on is if the US dollar is worth less, people don't want to hold their assets, their savings and investments in US dollars, they will move to safe havens. Once again, gold. Gold is the perennial safe haven and has been for thousands of years, except for now, except for the last 10 years, where we have the very first alternative to gold, something called Bitcoin. What's good for gold from this point on going forward is actually good for Bitcoin. So let's talk about gold. So we've seen some interesting things. We've seen, while all of this is happening, and most of this in the US, earnings per share drops, yield curve flipping, massive money printing, quantitative easing. We've seen the Chinese and Russians hoard gold. The Chinese have been buying gold consistently for the last 10 years. What do they know, right? And with the Russians as well. The Russian government has been doing this. The most interesting thing, and I'm just going to read here for a second, is that we saw a tweet not more than a week ago from the Dutch central bank. So here's a Western nation saying that gold is important. So the actual tweet, you will find this on the internet. So I'm reading this off a site called Zero Hedge. Central bank issues stunning warning. If the entire system collapses, gold will be needed to start over. Why is a central bank in a Western nation talking about the entire system collapsing? Where is that coming from? And more importantly, they're talking about all the gold they've got. So in this article it says, according to the IMF's latest data, the DNB holds 615 tons of gold, about 15,000 bars, mostly in Amsterdam with some other stores in the UK and North America. The value of this gold reserve is over 6 billion euros. Okay? And a quote from them, gold is the trust anchor for the financial system. If the whole bank system collapses, the gold stock provides a collateral to start over. Gold gives confidence in the power of the central bank's balance sheet. So this is absolutely critical. We've now reached the point where it's not just the economic indicators that I've spoken about that you see, but we're now seeing central banks talk about the importance of gold. And we know that there is an alternative to gold. So what does this mean for Bitcoin? So firstly, some people have said that if you want crypto to be gold 2.0, you need a gold-backed crypto. And many economists and many commentators like this idea. They feel that it's a good idea. I'm not so sure, because what I don't like about gold is that it's big and it's heavy, and if I want a lot of gold, where do I keep it? I need to trust someone to keep it on my behalf. I can't move it around. I can't go around the world and easily move large amounts of gold. So the physicality of it is a problem. And Bitcoin takes this away. Bitcoin is based on mathematics. It's backed by mathematics. Anything backed by mathematics has inherent advantages. And, people talk about Bitcoin being slow, but it's faster than gold. And perhaps that is all it needs to be. So here's my view and what I feel is the problem with gold. So firstly, gold was very important because it was central to the international system of trade. We've now reached a stage where people want us to trade in fiat currencies, where they want to kind of tell you what their currency is worth. And everybody wants to hold reserves of everybody else's currencies. There's a bit of a trust problem. When we had the gold standard, people knew that if the US dollar was backed by gold, and I have $1 million US, I know what it's worth. The reason Bretton Woods failed, as I mentioned in my previous video, was that people could then trade with the US, run up a surplus, and then say, I have a surplus of millions of dollars. I'm going to give it back to you. I want gold back. And there was fear that Fort Knox would be emptied. The US reserves would be emptied. So that and the thinking that we have to increase the money supply is why the US government, Nixon at that stage, increased the supply of money and took it off the gold standard. But it created a new problem. Created a problem where people had to trust each other's currency for the international system of trade. So it looks like many commentators are saying we may have to go back towards gold-based currencies, gold-backed currencies, for this international system of trade to work. Coming back to Bitcoin, this is why I feel Bitcoin is already so valuable and so important. You see, it's not about the currency. People first talked about Bitcoin as being a new digital currency. But before you get to a currency in a domestic market, which is microeconomics, you first have to look at macroeconomics, global trade. You need something common that is trusted across the world, across economies by counterparties. And that was gold. And that is a store of value. And you've heard this term before, store of value. And some of you will be groaning now. He's talking once again about Bitcoin as a store of value. But you need a global settlement that is trusted before you can have currency systems built on top of that. Okay? And what I mean by that is that function between countries, for settling debts between countries, for backing for your trade, not backing your currency, backing your trade, trust. All of that was fulfilled by gold for thousands of years. But gold is slower and physical, slower than Bitcoin. And I'm now starting to think that it's more important to have this store of value, this layer of trust, this entity backed by mathematics that can be trusted by governments and entities around the world to facilitate global trade. And after we have that, we can then talk about digital currencies. It's not a cop-out. If you understand global economics, you know why this is important. Everything that I've spoken about, Bretton Woods, gold-backed currencies, economic indicators talking about potential recession and a crash and a move back towards gold, shows you how important gold, or in this case, gold 2.0 is. So all of that for me is a very, very positive sign for Bitcoin. The fact that maybe other people aren't saying this is because some of them haven't realized it yet. The traditional economists are still talking gold, gold, gold. They look at all these economic indicators and they fall back to one thing, gold, without realizing that we have solved some of the problems of gold today. The newer, I don't want to say economists, but people who are now in the crypto scene, younger people, are talking digital currency, cash, digital cash. And of course, from a more technological angle, they're talking smart contracts and decentralized banking and all of those things. I'm trying to show you that there's a piece in the middle. There's a piece in the middle where we have all these economic indicators talking about potential problems, and we do have something that for now could complement gold. I wouldn't go so far to say that it will replace gold today. So for now, it can complement gold and be an alternative safe haven, an alternative mechanism for global macroeconomic stability, an alternative towards balance of payments, settlements, trade between nations. And that is Bitcoin. And it's not very fast today, but it's faster than moving 2,000 bars of gold. It's faster than that, and it's more easier than that, and it's more easier to secure than that. So I think, and this is my hypothesis, and I might be criticized right now for this, but I think once people realize that, it's going to be very good for Bitcoin, regardless of what happens after that, whether the layer 2 Lightning Network takes off. I've heard mixed stories about where that is right now, and facilitates a digital currency after that. To me, that's not right. That's not the most important thing right now. I also believe that some people have cottoned on to what I'm saying, and perhaps they can explain it a lot better than the way I'm explaining it. I'm not, as you can see, a real economist, and maybe my explanation isn't the best, but I think there are governments out there hoarding Bitcoin because of this reason, because it's going to be critical to global trade going forward. And all the economic indicators point to, that I mentioned in this video, that's the purpose of this video, point to some problems in the US which will spill over to, definitely Western nations, but also other major economies around the world. And you're going to have those holding gold, and I'm saying holding Bitcoin, that are going to be very well placed. Why? I think the price of those assets will go up. Which brings me to a very other important point. If all of this has happened for the last 5 decades, why hasn't the gold price shot up? There is a theory that the gold price has been contained. And if the gold price has been contained temporarily, I don't know if it's even possible, but remember, the people in power have had gold, have been in control of gold, and this alternative to gold now, with a few improvements, but which could play that function, that role in international trade and macroeconomics, isn't yet controlled. It may well become controlled by nation states and powerful individuals, but not yet potentially. And so the valuation that we see today, $8,000, there is tremendous upside. So if you sat through all of that boring stuff, if you just want to know what I'm thinking about the price of Bitcoin, here's a summary for you. I don't think right now digital cash is very important. I think I've outlined reasons why gold has been so important to global trade and macroeconomics for the last few centuries. And we have a better, faster, more flexible version of gold, more secure in some ways, more easily moved. And we have, famous commentators talking about how important gold is because of all these signs that we're seeing. But here's a better version of gold, gold 2.0. And no one's talking about it in that way. And I think that the signs for Bitcoin having said that, are very, very good at the moment. So I don't know if that made sense. I did ramble a bit. Based on your feedback, I'll explore the topic again. But I hope that gave you some food for thought for now. And if you like, if you're interested in global economics, I'll post some links to some articles backing up what I'm saying, or just some extra reading for you. Leave some comments, let me know what you think, and I'll see you very soon with more crypto and tech related topics. So have a good day, and I hope you enjoyed that.